Can you hear echo on something?
No, it's
Okay, so I'm gonna turn this off and make you guys see my face.
don't do that. It scare everybody off.
Thank Thanks for that, bro. Thanks for the motivation, Thanks for the confidence boost. Yeah. Um. Anyway, where are we? So that's not what really was supposed to be shown. It is, but okay, there. I refreshed it now. All right. Can you see the screen? Can you see my face too?
Yep.
Okay. Hey, twin. So, um, yeah. So we made a new indicator, right? This indicator, it's fire, right? Like right now, I don't know if I'm able to show you guys, but what we did in the morning, but everything is lined up in the main chat, in the private chat. You guys can see. But let me go over it again. So basically, the indicator, what it does is it it checks for order flow, right? So we have order flow, and basically order flow means like this is a trend, so this is a trend. It does not necessarily mean order flow, right? Order flow is something really hard to find. For example, here is a trend. This looks bullish, right? Maybe some people say this is order flow bullish, but it's not really. It just came back down. Or this is bullish order flow, but it came all the way back down. This is bearish order flow, but it came back all the way up. So it's very tricky to find order flow, right? When you have the order flow, you know where the market, it will make your life easier because then you would trust that these dumps will be held, right? So and order flow has to be on a high time frame. So everybody, when I say how can you find the order flow, the first thing they say, okay, they will be like, okay, go on like on the 1 month. Okay, you check the one. Oh, there's a lot of stuff here. Go on the monthly, and and you say, oh, monthly is bullish, right? It's everything is bullish. Monthly is we got an FEG. Let me just give me a sec. They were like, okay, they will start drawing order blocks. Like if I tell you find the narrative, find me the draw liquidity, find me where we can potentially enter PDRAs, they'll be starting doing this, right? They'll be like this. You have then, I don't know, an order block here. I'm not gonna draw it as that. I'll draw it as a line. You got an order block here. You got well, yeah, pretty much that's the monthly. If you go on the weekly, you'll go down like this, and you'll see that here we got a bearish FEG, a volume imbalance, and here we have a bullish one, and then that's on the weekly, right? And we got another block here, and then if you go, I don't know, on the daily, you will see that we swept this low. We have this FEG here. We never really tapped into. We have these bearish FEGs. We got volume imbalance, FEG, and a volume imbalance plus liquidity void. So you highlight all of them, and then you got, I don't know, another thing here, another FEG here, volume imbalance slash volume imbalance, and you got small volume imbalance there. And then if I drop again to the 4 hour, for example, here you will have much more shit. You will see that we have another FEG here plus volume imbalance. I'll include it inside, and then I have these two FEGs, and then I have this inversions. All of these are important, right? And you got these FEGs here too. I'll just include them as a one. And I'm not even looking into breaker blocks, order blocks, whatever. That's it. So basically, what do you do in this case? Like price here, would you short? You short till here, you long here. Okay, it came back, it longed here, it went back up a little bit, and then it came back all the way down. Do you short long here? Well, you got stopped out. Do you long here? Well, you just got stopped out. I don't think you probably longed here, put your stop loss here. There's so many stuff on your chart. Look at this. This is called trapped liquidity. This you cannot trade it. If I tell you find me the order flow, what would you tell me? Well, the monthly is bullish. Monthly is bullish. The weekly is obviously. How do you interpret this, right? This is a big ass candle, right? Yesterday, right? We were bullish, but now we have a big ass dropping candle. Downgrade. So maybe are we going to continue this trend? Did we invest this FVG? Are we bearish? We're bearish on the weekly. Let's check the daily. Well, the daily, we just swept these lows. We dumped now. We swept these lows. We were bearish. Now are we potentially being bullish, or we could potentially just retrace into this 10 of these FVGs to go down more? If I go on the 4-hour, the 4-hour looks very bearish, but now it looks very bullish. Is there going to be a retracement? Or is it going to be OTE? So all this stuff is hard. That's what makes order flow hard to read, right? I think anybody doing this, when they think, okay, I can just, everybody that have a good, like, when people lose money, they were like, I don't know, I'm just so sick of using 1 minute to get stopped out. Then they'll be like, and then some smart ass will come and say, just use high time frame, bro. You have to check the high time frame. Well, go ahead and check the high time frame. What do you see? You see this nonsense. This is bullshit, right? It is hard because you will never see all time frames aligning, all time frames not contradicting each other. And most of the time you'll either see contradictions or two will be together. I need to move my bed. Give me a sec. Shh. One will be neutral, one will be bearish, two will be bullish. You don't know what to do, right? So that's where the idea came from our indicator, and that's not really the true way of identifying order flow. So really identifying order flow is, I'll make it really simple for you guys. Here, you start on the monthly, okay? On the monthly, take your notes. On the monthly, on any time frame, you want to only check the latest leg. You want to check the latest PD arrays. We're just beginning to be focusing on FEGs as an order flow. And when I say the latest, I don't just mean, okay, this is the latest one. No, I mean in the leg. All right, so how do you determine order flow? Let's have a look. Let's suck at this. So, order flow. You need 1, swing high. That's something you never hear before. 2, you need a swing low. Well, you need an FEG. 3, you need a swing low. Okay. Now, an FEG on its own does not determine order flow. And that's what everybody's trying to see. When you say FEG, they try to long it or they try to short it. That is not true. You need a swing high, you need a swing low, and you need an FEG in between. Just a swing high and a swing low does not make this an order flow. For example, from this swing high, or from this swing high, well, they all have FEGs. From this swing low to this swing high, we don't have really an FEG. Even though it's bullish, you can call it a bullish order flow. No, bro. You need a swing high, FEG, and a swing low. Then that is, and it has to be the latest. The latest swing high, the latest swing low, and an FEG in between. That makes it an order flow. Now, if you do not have an FEG, there is no order flow there. You don't say, oh, it's bullish or it's bearish. You just say there's no order flow. And if there's no order flow, you do not trade that shit. Okay? So, on a monthly, and trust me, all this stuff is new and you've probably never seen it before. So, on a monthly, we identified the latest high and the latest swing low. This is the latest swing low. This is the latest swing high. Well, if this candle closes here, like in 18 days, this monthly, we will have a swing high. But for just observation, this would be your latest swing high, latest swing low, right? So you'd be looking for FEGs here. There's one FEG here. It's gonna be hard drawing them. Another monthly FEG. So in this swing high, in this leg, in this swing high and swing low, we got 3 FEGs. These are important. They can be either magnets or they can be entry points. Okay? So sometimes you be like trying to short, I don't know, you check in the weekly or like the 4 hour and you see it's a very bearish structure, you see an effigy and you want to short it. But just below it, you have, for example, a monthly bullish effigy. And you're trying to short here on this 4 hour, or maybe like right here, and there's like an effigy here, or this effigy here, this effigy here, and you're trying to short it, but on a monthly there's a bigger effigy. That's the magnet theory. That effigy is going to be taken into account more than that 4 hour. Even though 4 hour is a really high, is a very high time frame. PDR, it's very strong. So this, the whole point is to identify these. So here you can see that this candle, this week has not been formed. This swing high has not been formed yet. So you do not look at these. There is no structure. There's no order flow on the on the monthly, right? On the monthly, there's no order flow right now. And I posted in the day. There's no order flow. There is, well, if this continues like this, we probably get in 18 days we'd get a swing high. Then these would be very important, and the price will start getting attracted to them. But right now, it doesn't. There's no order flow here, so the algorithm will not take into account these. It will not take into account these periods. It will not even want to retrace to them. Okay. Now, let's drop to the weekly. On the weekly, we have a swing high, we've got a swing low. In between, do you have an effigy? No, there is no order flow here. Always look at the latest swing high and swing low. If there's an effigy, great. That is your order flow. You will check, is it a bearish? It's a bearish order flow. It's a bullish? It's a bullish order flow. Here on the monthly, we don't have an order flow. On the weekly, we don't have an order flow. So our higher time frames are off the table, right? I don't care about this effigy here, this volume balance. I don't care about this one. I don't care about anything else. I care about these, whatever is in that latest leg, because that's what the algorithm is gonna be triggering. It's gonna be identifying, and it's gonna be hunting towards, because its algorithm is it's code, and it's coded to find stuff, and in order to be able to find stuff, it has to have predetermined set lines, set points of data, and this is the latest ones. All right, now let's drop for the daily. On the daily, we have a swing low. Nice. Where's the swing high? All the way at literally market all-time high, right? This swing high, swing low. So you will see that here we have one FEG. This is a daily FEG, and I said in our presentation, I said pictures of like the chart with like annotations. I said we might be counting towards this daily. That's going to be our drawn liquidity. We'll either bring the price up here to short all the way back down, or we'll just bring the price up here to invest and go up. Either way, this is our narrative. The whole point of this FEG between swing high and swing low is the narrative. If it's on a lower time frame, it's for entries. On a high time frame, it's the narrative. It's in order to take out this low, we have to come back all the way back to this FEG and go down, right? In order to go higher, we have to bring ourselves above this FEG and go back up. It's the narrative. The narrative is the how. The how, okay? This FEG is the how. If there's this FEG, this FEG, this FEG, this FEG inversion, no, it does not. It does not give us the narrative. So if I turn this on, you will see that we have actually. Give me a second. I think I changed the daily to a 5-minute. Yeah, I was testing a 5-minute, the daily. You'll see that it draws out here for you the daily FEG we just draw, right? And it will tell you what kind of FEG it is. It's the daily bearish bag breakaway gap. In breakaway gaps, we do not expect the market to come back to them until the target has been hit. What's the target? The external range liquidity. While we're here, once we form this FEG, daily FEG, what's our target? This low, right? It's gonna go from external liquidity. There's two things: internal liquidity and external liquidity. Internal liquidity just means FEGs. External liquidity just means highs and lows. So price always goes from internal to external and from external to internal. Internal to external, so from FEG to highs and lows, it's higher probability. From highs and lows to an FEG is low probability. Okay? Does that make sense?
Yep.
Right. So I'm a person, my trading, normally how I trade both. In fact, if I say I want to go short here, to take out this low, I'll wait for my price to go here. I do not wait for my price to come back to this FVG to go target the external range liquidity. I'm a person who's a bit stupid in that case, but it works for me. I say, okay, I'm looking for shorts, but instead of waiting for the price to take me to where I want to short, I find myself a setup that takes me to this FVG, and then I'll close my short at my long, and I'll open a short down. Okay, that brings my win rate probability. It starts to fluctuate. It starts to, I might win this short, but this long, it may not long because it's a trend. This now is a downtrend, and I'm counter trending. It may not even need to come back to this FVG because it's a breakaway gap, right? But so the probability drastically starts decreasing. Okay, so the best thing to do is just wait until you hit that daily, and then short toward it, short from it. Okay, for example. But since we took out that liquidity there, it did. Shh. Give me a second, guys. It does not really need to come back to that daily breakaway gap. It does not need to go back here to go back down because it already taken the liquidity. I'll explain that in a second. Let me just, my birds just keep making sound for you guys, and I don't want them to. Okay, I think that was giving you guys a bit of a headache, right? So here, it draws it for you automatically. So around here, you would be like, okay, breakaway gaps are, as the name implies, they don't need to be touched. They're breakaway. They will run straight to the target without need to be filled back. FVGs are imbalances, so they need to be rebalanced and repriced to. But breakaways don't need to until they hit the TP. For example, this is a breakaway gap. It does not need to retrace into it until it hits the target, right? Or another example would be, this is a normal FVG, right? But again, I want you guys to see like this. I don't care. I don't want you guys to look on the left of the chart. The whole point is, I swear I drew something. Hold on. Did I not save it? I don't want you guys to see the right of the chart, okay? Let's save that as, this is really important, guys. Okay, so ignore everything on the left. Your job is to identify the swing high to the swing low. Okay, nothing else. Let me remove that line. This is all you have to work with. You don't need to be finding millions of FEGs. You don't need to be finding different PD arrays. Your job is to find order flow. Identify it in a second. This here, we have a bearish order flow, right? Here is your bearish order flow. You got daily, you got swing high, you got swing low, and a FEG in between. That determines, is that FEG bearish or bullish? It's bearish. Okay, so the daily has the bearish order flow. Okay, so when you're taking trades on a low time frame, you should be taking into account that we are still bearish. Even if we get a bullish candle, we're still bearish. Something like that. Okay, so let's drop down to the 4 hour. On the 4 hour, we were bearish, and it will this indicator will automatically delete the old the FEGs, and it will print the new ones automatically on every swing. Okay, and you can put alerts as well. So, and it will plot them on the lower time frame, and it will give you a little dashboard here that will tell you that once this FEG is touched, it will say daily breakaway gap is reacting, or daily breakaway gap is failing if it's breaking through. All right, so you will see that here it draws the daily. We're on the 4 hour, but it still draws the daily. If I go on like I don't know, 15-minute, you'll probably still see the daily at the top. You still see the daily, right? So you don't need to be changing time frame. You can just stay on your 3 minute, 1 minute, and you can be still trading. So let's say I'm trying to short here, right? Let's say I'm trying to short here. Oh, it's dumping. Let's go. And then, but you're shorting into a 4 hour fair value gap, all right? Think it like that, okay? It saves you. If I have this indicator off, I'll be like, okay, we pump, we consolidated for a few hours. Now we're dumping. We just broke away, and we're dumping, right? No, you have to check the high time frame, and checking the high time frames If you do it manually, you'll end up drawing millions of FEGs, and it's gonna give you a trapped order flow. It's gonna show you we're bearish, we're bullish. Do I long here? Do I short here? Most of the time, you're gonna see them close to each other. So they just keep ping ponging. That will make you money because every trade will be like, I don't know, like 10 ticks, 20 ticks, 10 points, and yeah, it's not feasible in long term. So drop into the 4 hour, like I said. On the 4 hour, we got swing low highlighted, swing high highlighted, and these lines, by the way, are your target. So on this 4 hour FEG, we'll wait for the price to touch it, and then we'll target that external range liquidity. These are external range liquidities. Okay, you have the option to make them turn on only after the FEG has been hit. For example, if I change this stop show IRL before show external range liquidity lines before IRL is tapped. If I turn this off, it will only show me these lines once the FEG is hit, right? Because while it coming back to this 4 hour FEG, it can make new swing high, for example. Not swing, yeah, new swing high. And then you would have you would end up with what do you call it? You would end up with a new target, right? So it would confuse you. It would automatically update, but if you turn that off, it will only plot it once the price comes back here, and then it will set the lines for you, so you can start targeting. Okay, so I'll answer questions in a bit, but this is basically, you can see that the 4 hour, we have swing low, swing high, and we've got an FEG in between, right? That makes it your break, that makes it that the 4 hour is order flow bullish. And in fact, today morning, I said that if we come back here at 6 a.m., we're gonna form a new FEG, right? So look, you can see this was bearish. This was Monday, this is Friday, this is Sunday. Okay, give me a second. Quinn, please turn off your mic. Okay, I'll be right down. So I said at 4 a.m., 6 a.m. Give me a sec. At 6 a.m., so the next candle, wait, this is 2 o'clock. Anyway, I can't reproduce it apparently. But at 6 a.m., we're going to be forming, this is 6 a.m. candle. So once this candle closes, we're going to form an FEG. We were around here. I said, if you check the chart, the channel, everything is in there. I said, if the 4 hour had a swing low, swing high, but no FEG. Once that candle closes, we're going to get an FEG. And that candle closed at 6 a.m., right? So at 6 a.m., it closed, we formed an FEG. And I said, now that's the 4 hour went from neutral to bullish order flow. That just made our trades much high probability. That the daily, the weekly, no, the monthly is bullish, the weekly is neutral, the daily is bearish, the 4 hour is bullish, and we were checking the 1 hour. The only time frame that we were really focusing on was the 1 hour. The 1 hour had, you can see it drops the 4 hour for you. But again, as the time goes, it gets deleted, right? Because the new swing high is formed. Back here during the morning when we were trading, we had this swing low, and I'll show you in replay, and we had this swing high, right? Right there. So we had this FEG here. So let me show you guys. And that's what we traded. We had this FEG. And that's basically what we drew and we took a trade on. If you guys remember, it's in the chart. Fair value, 1 hour, it drew it for us, all right? And basically, if I go and draw on the lower time frame, does it still show? Yes, it shows you that we got the 1 hour there, all right? But then, what happened? If I go on here, you see that we had an hourly FEG. Am I doing this correct? Damn, guys, it's everything. Actually, maybe I can just show you guys from the if I can share the main chat, because I posted everything in there. Because like I said, it updates, right? So whatever happened, when a new structure happens, when a new swing high and swing low happens, it removes the old FEGs because it's no longer needed for us. The algorithm is not going to be referring to them until maybe later on. But right now, it's going to be focusing on the new leg. And the tab based on that order flow is going to determine, okay, shall we go up or shall we go down? Okay, so if I stream, I think if I stream that, because at least until market open. So if I do this here, you guys can check on your own accord, but what I said here was have a look here. So I said monthly bullish order flow remains in control. 3 FEGs could drive the price to all-time high. These FEGs are unlikely to be reached unless the weekly, daily, and 4-hour are all bearish, right? And that's exactly what we saw. That what happened. The next took a second. Weekly order flow. There's no order flow. There's no FEG because we didn't really form a swing low yet. We formed a swing. We didn't form a swing low until this kind of closes. So we may print a potential FEG, but that's next week. So the potential bearishness is not gonna happen this week. Maybe next week. Okay, but this week I'm not looking for anything bearish. Now, if you check the daily, I think you guys can see this, right? On the daily, it's obviously bearish. We got swing high, swing low, and we got a daily bearish FEG, right? That one is a breakaway gap, like we said, but it already hit its target, right? So the daily was bearish, but in my opinion, since it already went from internal to external, now it has to go from external to internal. So basically, it's turning bullish. It swept, it formed the bearish order flow to take us to that major point. We took it, and now we're slowly reversing. So it's bearish, but it's starting to show signs of bullishness. Maybe by end of today, tomorrow, that order flow will turn bullish because there's only one candle per day. And yeah, so wait for price to reach the debug, then look for entries on low time frame. Then we go to the 4-hour. The 4-hour says neutral. You can see this is the daily bug. On the 4-hour chart, the daily bug is shown, the FEG. On the 4-hour, there's no order flow. Why? Because we got swing low, we got 1 FEG, we got 2 FEG, but we don't have a swing high yet. Until this candle closes. When does this candle close? In 3 hours. What was the time? It was 3 a.m. So 3 a.m. in 3 hours is 6 a.m. At 6 a.m. this candle closes, and if it closed below this high, this will be a swing high, and we got our FEGs, and that will turn that 4-hour into bullish order flow. Like you said, recheck at 6 a.m. New 4-hour candle. If swing high forms, order flow turns bullish. If confirmed, draw magnet becomes the daily bug. So we'll be looking for up because now the order flow is bullish, and the magnet is the daily, the higher time frame. The only FEG we got is the daily. Since we took the lows, we're just looking for higher prices. We don't need it to go to the daily breakaway gap. We just need it to go in that direction up. And we're going to target externals. So next, move into the hourly. The hourly is very bullish. Why? We got swing low. There we go. And we got swing high. And we got 1 FEG, 2 FEG. Beautiful. So here I said how you guys can enter. Multiple FEGs here we have. I said, guys, let's enter at the 1-hour FEG. Okay. It looks very bullish. It was going very up. I said, let's wait for the 1-hour FEG, and then we'll find a smaller time frame entry there, or we can just turtle super small position on the hourly. As soon as it touches a 1 hour, we smack a long, small position. And if it gives us a 5-minute FEG, order flow leg on a 5-minute or like 3-minute or like a 15-minute, we'll smack on that one as well. And that's exactly what we said. And finally, on the trading time frame, I showed you guys that here we got NWAG, we got all these levels, we got midnight open, we got our 1-hour FEG. So here's a very good bullish area. We got other confluences. You don't need to be looking for them, but that will extremely increase your win rate. Okay. And we got targets above our odds. So everything's showing that we want the NWAG, NDOG, and we have daily breakaway gap, and order flow is bullish on multiple time frame, higher time frame. So it makes sense that we go up towards there, right? And it also makes sense that once we enter this NWAG, NDOG, I normally would be shorting. I'm like, okay, I'm gonna long to this area and I'm gonna short. But because of this order flow, I said, I'm not gonna short. I'm gonna use this opportunity for us to retrace to this 1 hour, and then I'm gonna smack along. If it gets me filled in, I'll target this NWOG NDOG. If it touches the NWOG NDOG first, it'll retrace back to this 1 hour and I'll smack along again. Or I'll find myself the first entry, okay? And so here we said total soup entry style. I said, guys, 4550 right there. You can enter here and you can target this NDOG, sorry, this NWOG that we just shown a second earlier. And that's pretty much everything here not in hindsight, before it happens. Everything, I'm literally telling you guys what to do, where to enter, what to do, how to do it. Basically, the indicator is telling what to do, and I'm showing you guys exactly the same. I'm not coming back in hindsight. I'm not a hindsight bullshit like the other YouTubers. Okay, so here you can see that I showed you guys 2 levels. You can enter either at total soup at the 1 hour level, or you can wait for a 3 minute, 5 minute, 15 minute FVG. Not any FVG like here. Not any FVG, swing low, swing high, and an FVG. Okay? Okay? So if we get an FVG here without a swing high, don't take that. That's a fake. That's when you see an FVG. You try to long it and then it just fails. Okay? So that's the safer entry than the total soup. And finally, we've got a third safest entry, which is confirmed order flow. What that means is you hit your key level, and then on the 5 minute or like a 3 minute, it goes up, it touches an FVG, and it bounces, it displaces up from that FVG. Then you see another new FVG, and you enter on that FVG. Because now you have a supportive order flow. You got old order flow, you got old order flow showing you that, okay, the next order flow leg should be also bullish. Since the previous one held, this one should held as well, right? Not just any FVG afterwards. It has to be another swing high, swing low FVG, okay? So you can see that, guys, here, the price came back straight to that 1 hour candle. What? Zero drawdown. Zero fucking drawdown. It taps it right there, and it goes to the NWOG NDOG, which was around 510. So it went to 510. Zero drawdown entry, boom, beautiful. Our actual target was pretty much, where was our target? Our target was actually, yeah, that NWOG NDOG. Pretty much that was it, okay? So you can see how powerful. We said that you could have made a lot of money on that trade, okay? I think most of you took it, a lot of money there. But then we continued. We said 1 hour FVG printed, order flow is bullish. Now we can tell, so okay, that we talked about now. 1 hour FVG printed. So now a new leg here, this is the old one. Then a new one printed, okay? A new 1 hour FVG got printed. The old one has been deleted. Why? Because we got swing low, we got swing high, a new fresh one. The old one we traded, this one is no longer important for us. There's another FVG here. Look, this one is 460s, and the new FVG is 517s. The old one is deleted. It's no longer on the chart. We don't need it. You don't need to clutter your chart. You gotta have an hour FVG here, another an hour FVG here. You're gonna be like, oh, I don't want to long the first FVG. What if it decreases? What if it dumps to the second FVG below us? Or what if you try to act smart and say, okay, let me try to enter at the lower FVG. Why? Because it's in discount and it's the safer one, right? And I'll get a better entry and more profit. But then what happens if he doesn't come back there? You just missed out on a good trade, right? Yeah. So, I'm just checking if you guys could not see my screen, but I'll check your message later, twin. So here, continuing, new FVG. So here you can see it consolidating. We have this FVG. I said to you guys, wait for an entry here. And surprisingly, it came back to our entry exactly in a micro. So that's how I felt more safe to actually, I was looking to add maybe 2 micros, but then I decided to put 4 because we're in a micro and a good place, high time frame, beautiful place, right? We waited. And finally, it's macro time. If we get an entry, it's going to be plus inside macro. It's going to be just much better. It's going to be sick. And at the same time, 6 a.m., 4 hour candle has printed. Now notice, guys, I'm explaining to you guys everything manually, but the indicator does it for you anyway. You don't need to do what I'm doing. I'm just explaining you guys the logic behind it. So here I showed you guys that this new candle closed, new candle open, and we formed that 4 hour. We have the swing high, we got the swing low, and we finally formed that 4 hour. Here you can see the price slowly going back to our entry. Anybody trading here would have fucked up their account. It's going down, it's going down, it's going down. Beautiful, beautiful, beautiful. eventually it, boom, it taps us in. And then I say update, monthly 4 hour, 1 hour are now all bullish order flow. This does not mean that, drop along randomly. It does not mean drop randomly. It just means order flow is bullish. Now wait for an entry inside a higher time frame, FEG. Whatever's closest. You have an hour, you got 4 hour, you got daily, you got monthly, whatever it is. You will wait for the closest one and you smack along a turtle soup there, or you would, once it touches it and it pumps back up, you would wait for a lower time frame entry, like a 1 minute FEG, 3 minute FEG, 50-minute FEG, but not any FEGs, guys. Most of the time, you'll see probably an FEG, like, let's say it bounced from its hourly, and then it printed an FEG here, and it just stopped you out. I'm talking about swing high, swing low, plus FEG in the middle. That's the secret, guys. That's the fucking secret. Okay? So the only entry we'll take will be the narrative and narrative FEGs. So we call that swing high, swing low, the FEG in between, a narrative FEG. Okay? So here I said this 1 hour FEG and that 4 hour FEG on the chart picture above, not any other FEG. So if you have any other FEGs like this one, it is not your concern. It's gonna only make you lose money. So 5-minute order flow inbound 2, blah blah. We also got a 5-minute, we got swing low, swing high, we got a 5-minute, 2 5-minute FEGs. In fact, as it's stopping into this FEG, I added to my position. We entered here, I added another to my position here, and now where do you put your stop loss? I'll talk about stop loss in a bit. But you put your stop loss at the swing low, if you're long, at the swing low of the order leg. So here is, if you decide to enter on the 5-minute, you have a high time frame 1 hour FEG. It will tell you in the indicator 1 hour bullish IRL, so internal range liquidity, reacting. Boom, beautiful. You got 5-minute, 5-minute bullish IRL reacting. You would enter here. You put your stop loss at the swing low of that leg, of the order flow leg, okay? Not below an FEG, not below a stupid different order swing low, not below just a low, a swing low of the order flow leg, okay? So I entered here and I had my stop loss below the hourly FEG leg. I'll show you another stop loss you can put. And when I added to my position, I did not keep my stop loss at the original stop loss. No, it said I entered on a 5-minute order flow leg. So my stop loss for these new contracts would go below that order flow leg. So I added 4 micros here. I entered 4 micros originally and then 4 micros later. That later additional contract, you put your stop loss at that swing low, okay? So if it stops you out, you still have 4 contracts from the original hourly order flow leg trade, and that stop loss will be here, okay? So you minimizing your risk, and at the same time, you're entering in perfect places. Only God's perfect, but yeah. So I entered 4 here and 4 on that one tap, touched it and it just ran, okay? And our target would be that external range liquidity. It draws it for you automatically, okay? So here then you would see we entered here, then we entered at that 5-minute FEG. I entered 4 here, 4 here. My average entry was on this daily, on this 1 hour FEG, and on the next one was on this exactly low of this FEG, and boom, I was up instantly at 300. And most of you just need 250 on a day, right? But the whole point of this order flow trading is actually catching the whole move. I caught the whole move, and you guys caught the whole move too, from entry here all the way to the high. That was literally 55 points. And I was in 15 micros because you can be able to add to your position and the risk will always be low. So if you enter here, 5-minute FEG, your stop loss will be added, will get split and put at the current low of the leg, okay? If it's a new position, the whole stop loss goes here. Guys, just give me a second, the door's opening. Okay, sorry guys about that. I'm back. So, yeah, if you enter a new position, you add on this 5-minute order flow leg, you put your stop loss at the low. If you add to your position, you put the whatever contract size you put in, added more, add that swing low. You don't keep the whole position at the original swing, original stop loss. Okay, so update, we're up 500, easy. Look, we entered again, smooth ride, guys, smooth ride. Okay, and then here the indicator is very, very reactive. So here you see 15-minute is now bullish. Now the order flow is also reacting. So we have, I deleted the 5-minute, but we've got 5-minute bullish IRL reacting, 1 hour reacting, and the 15-minute reacting. But everything started with the hourly. Afterwards, the high time frame, and then the smaller time frames can help us smoothly start riding. So the 15-minute, we have a small 15-minute formed here, swing high, swing low. We got an FEG in between. Now that's the order flow. So order flow, I'll repeat, order flow legs. In order to determine order flow, you need a swing high, you need swing low, and an FEG in between. An FEG on its own, without swing high and swing low, is not important. A swing high and swing low without an FEG, it's no order flow. It's not, oh, it's bearish, it's a dumping candle. Oh, it's bullish, a dumping candle, it's a pumping candle. If there's no FEG, it is not an order flow candle. So here, for example, from this swing high to this swing low, there's no FEG. So even though it's dumping, it is not bearish. It's not bearish. And to prove that, we took a trade long here and we made an all-time high. I mean, we made a new daily high today. Even though it was very bearish, right? We got manipulation candle, we got accumulation, and we displaced down, etc., right? There's no FEG here. If there was an FEG here, we'd be like, okay, the order flow is bearish, right? It's bearish, but there isn't. Here, there's a swing low, swing high, and it's tiny FEG that makes the order flows bullish. Now the monthly is bullish, the 4 hours bullish, the 1 hour bullish, the 15 minutes bullish, the 5-minute bullish, and I'm pretty sure if we check the lower time frames would also be bullish, but we don't care about those. We're trying to stay fixed away from those tiny stuff, minor time frames. Okay, so yeah, so here I would show you guys, it would say bullish IRL reacting, bullish IRL reacting. Okay, so here, order flow is based on fractals. You can guys have a read at this. It's very clear, very crystal. If you just could not figure out, and here you can see that 15 minutes starts to close below, and it starts to say bullish IRL failing. It's starting to fail. It will tell you, okay, this FEG should be holding. If it's starting to fail, keep an eye on this, okay? And then I write to you guys later, and it comes back up, says bullish IRL, still reacting. It's saved. It's still fixed until that candle is closed. Hopefully, thankfully, it's still fixed, still held. It's not just a candle-based closure. There's at least 10 different confluences coded into this indicator based for the ERL, the swing high and swing low determination, and the FEG determination, and failing or reacting determination, because you can still use the same FEG, but it depends on 10 different confluences. Okay, so the important thing is the hourly. All right, our job is now to just monitor these order flow in here in this small dashboard. Right, we're already in a trade. Invalidation port with the closure below the 1 hour, then it means we are going to head for that 4 hour we had earlier. Hopefully it doesn't happen based on possibility and calculated risk, right? So we have, remember, we got an hour FEG and we got a 4 hour. I think if I zoom out, we have that 4 hour right there. Can you guys see it? If that 1 hour fails, it means the price is probably going to go back all the way down there. But it's unlikely because all time frames are high, is bullish, and if it goes all the way back down to this 4 hour only to go back up, that would just be, it's just too far away, right? But it's still a possibility. Thankfully, that 1 hour FEG held. It did not even crack through with a wick. So all time frames now except the daily are now bullish, plus reactive, plus confirmed order flow, right? How we talked about already. So update, I'll show you guys. Update, I say, here it drew a line for us, and another line here. This is the 15-minute order flow leg. Target, external range liquidity. Yes, every time frame has its own external range. So I would take partials here or fully close here. And the 1 hour FEG has its own external range depicted by the black line as well. So let me show you guys here. This line here would be our target, right? And we target each and one of them. So here we continue. And finally we're up 600. We take TP here. I just split my positions. I don't really care. I like taking partials. So here we hit TP1. We hit TP2. We had 15 contracts. We took 12 off. We have 3 more running, so we made about $800 on there, and then the contracts continue to our maximal trade. So he says full close or 90% off plus break even. Okay, so continue. We had another tick one off because I was getting bored. I left one running, and finally we actually came back, and I think we hit it. So There was another account that's still running. It hit. I think there was this one's different. I don't know. I think still have it. I'll have the screenshot, but eventually I can show you guys on the live chat that we actually went and now I'm not sure if actually okay, so you can see that we actually came back and hit our target, which was, what was it? 569 569 569 569. Where's 569? Oh, we're in replay, sorry. So 569 569, that was our TP. That swing high was literally 569. There was a swing high here. We finished it. We're done with it, right? And look how much further it went up. I actually told you guys I want my one partial was at 600. We took that. I didn't hold it there, but I had that running one partial for like 2 hours. That's 600, and potentially the midpoint of that NWOG. We have NWOG here, which is 603. I just said 600, and we got another level 652, which is the midpoint of this FPG. If you had that one more micro running, you will be targeting those two. I had it originally at these, and you can check that in the Discord. But since I added to my position, I didn't need to. I already made about 990, so I didn't need to like just wait one micro and just go from like 600 all from 569 all the way to make only 75 bucks, right? I didn't need to make extra 75 bucks. But if I stayed in my original 4 micros, that would mean a lot to me, because then I'll be making an extra 75 bucks with only 4 micros, which is great. Okay, so all of them hit. And you see, we're inside NWOG, we're inside NDOG, we're inside this huge, this is the biggest FPG I've seen in my life. And we're pumping bullishly. Isn't that power, guys? It's insane. All right, and hold on, I need to do this because you guys have to see me. Yeah, so I'm back here. Now that we're done with Discord, we have NWOG, NDOG, we have bearish FPG, we've got high, lower, we've got a breaker block, we got inversions, we got huge order block, and we got multiple levels, and I think we have also 930 FPGs. I don't know if they will show. Maybe they won't. But all of these, it's just cracking through them, right? We've been long through this whole thing, only because of the order flow, guys. Now, like I said at the start of the stream, if you check the monthly, if I tell you guys draw order flow, you guys will draw so many stuff. It's not gonna help you. It's just gonna make you. It's just gonna. What's it gonna do? If I go on the monthly, it's just gonna thingy. You're gonna draw every FPG, you're gonna draw every order block, you're gonna draw these FPGs. It's gonna clutter your chart when you go on the lower time frame. On the daily is opposite of what the monthly doing. Look, monthly is going up, daily is going down. So like, what do? Do you go long? Do you go short? Do you bullet? There's a bullish FPG here on the monthly, but there's a bearish one on the daily. It's trapped order flow. We took the low on the daily, but on the monthly we still pumping, making all-time highs. What do we do, right? So that's where this indicator come into hand, guys. You can just stay on your comfort zone at the 3 minute, and it will draw the daily, monthly, all the time frame you decide you want it to do. 15 minute, 1 hour, 4 hour, but only the pertinent ones, the latest ones, and it will delete the old ones. It will not draw all of them for you. There's indicators that do that for you. There's indicators that they're called, like, I don't know, multiple time frame or high time frame FPGs, which it will draw all the FPGs for you on every single time frame. That's not the whole point. That's not the point of this FPG, of this. Go ahead and try those indicators. It's not helping you. This one, it draws. Once we invest this, it will, or let's say we swing high, swing low, swing high there. This day ended and we formed a swing high, right? We have another candle here, like this. Maybe a little bit lower, like this. Okay? So swing low, swing high, and there's an FPG here. It will delete this FPG. The algorithm will no longer put priority or prioritize that FPG. It's gonna be focused on this bullish FPG. We'll be waiting for our price to come back to this bullish FPG, the daily FPG, and then we'll see a lower time frame. I don't know, 5 minute, 15 minute, 1 hour. You'll probably see multiple there as well. And you can trade here. It will delete them for you. It will choose only, look, it draws what's important in that leg. Swing high, swing low, The effigy only if there's an effigy in between, this becomes an order flow leg. This is a bearish order flow leg. Okay. Weekly, I'll just repeat again. Weekly, we got swing high, we got same swing low. Do we have an effigy? No. The weekly has no order flow. The weekly has no order flow. All right, there's no order flow. There's no bullishness. There's no bearishness. Yes, we have got big dumping candle. Yes, we got bullish FPGs. I don't care about those. The algorithm is not going to be referencing these. It's going to be referencing the high time frame. Monthly, we got an FPG there. It's going to be referencing that. The 4 hours can be referencing that. The hourly is going to be referencing that. Whatever has order flow, whatever has a swing low, swing high, and an order FPG in between, the algorithm is going to be focusing on that time frame. Price is fractal. Time frames are fractal, right? This is what is meant by fractability, right? So 4 hour, we got swing low, we got swing high, we got 4 FPGs. It does not look for these FPGs here, this inversion. It does not care about them. That daily is important, and we made our way towards that daily. I said in the start that we're going to be looking for that daily since here. And that's about 1600 ticks. And we already made halfway through. We just made 800. Literally halfway through. In literally, the market didn't open until like, I don't know, an hour ago. Here, we got swing low. Sorry, we got swing low. We got swing high. We got FPGs, right? But they're not no longer shown. They're not important to us anymore. Not because they're far away. This action can be around here, and it was still not reference those because that's not the latest swing. Here was swing low, swing high. That's what we based our trade. This is the FPG we took trade from, and it's no longer on the chart, as if it just never existed, because the algorithm is busy focusing on something else. Look, the algorithm is not even focused on this bearish FPG. It's focusing on this order flow. Based on the order flow of multiple time frames, it's gonna be looking to push. That's when you will have like a very high, like NWOG, NDOG, bearish order block, bearish breaker block, and then you see the prices crack through all of them. That's how I lose most of my accounts. Or like when I lose big, I'm like, I have strong resistance here. I'm gonna smack a high probability short. It's a very high probability short. And all you see is it just gives a big FEG pumping candle through all of them, as if kind of like butter, as if there's literally nothing there, right? I'm pretty sure all of you experienced this before. I'm pretty sure, because that is a 100% account killer. And for my dignity, or for like my own repercussions, I add to my position, right? And it just keeps on going. Like there's not even a slight retrace, not even to break even. It just keeps going. That's why, guys, order flow. Okay, so here you can see it deleted the old ones and it formed the new ones. This one is a swing high, swing low. It deleted it. What's the latest? This is swing high, swing low. We got an FEG. It's no longer shown. Good morning, Charlie, bro. This is the swing high. Yeah.
Hardy.
How are you, brother?
Doing good, man. How are you guys doing?
Good, bro. I'll just explain this order flow indicator.
Oh,
Oh,
nice.
you sounded a bit tired.
What data is it pulling from?
Latest swing high, latest swing low, and an FEG in between. Based, if we have a swing high and swing low and an FEG in between, depending what side, what if it's a BIS or a CB, it determines that leg is bearish order flow or bullish order flow.
Okay.
We took a banger trade today for like 50 points and we just straight line up. Yeah. So I'm just explaining it. It's been wish you came at the start. I was about to end it, but we're nearing the end. But yeah. So here you can see we got swing. The 4 hours are being printed, and it prints all the high time frames, only the important ones on the chart. Not all of them. There's indicators that does that, Charlie. It just prints the ones that have the latest swing low and swing highs, the latest FEG inside swing low and swing highs, right? And it also draws breakaway gaps. So here we have swing low, swing high. There's not a swing high formed yet. So this FEG, or when this candle closes, we have an FEG, and then it will draw an hourly FEG, right? 15 minute, you'll see it on the 15 minute. We got swing low, and we got an FEG. There you go, 15 minute, and it's a breakaway gap, right? So do you expect it to come back to this 15 minute? I don't think so. It might just keep on pushing. It does not need to come back to this 15 minute breakaway gap, right? And one extra thing I added to the indicator is that dashed line. You'll probably rarely see it, but if you do, it just means multiple time frames have the same swing high. So if I draw 50 minutes time frame, swing high, like this. If I drop to like 5 minute, you see the swing, same swing high. If I drop to like 3 minute, you see the swing, same swing high. If I drop to the 1 minute, you probably see the same swing high, right? So that just makes it, I don't know, for those who like to use support and resistance, is important. So here we broke this and formed a breakaway gap. That's very important, right? It's just another thing. You don't need to use it. I don't use it. I just thought it's just a fantastic idea that can be useful in the future. So here's the dashboard, guys. You can see right now, there's no trade, right? Once it comes back to this break, 15-minute breakaway or whatever FEG, it will say interacting. It will say reacting. 15-minute FEG is reacting, or 1 hour FEG reacting, or 1 hour FEG failing, right? So it will also alert you if you guys want. And yeah, it draws the ERL to IRL, and IRL, and always look in the direction from IRL to ERL. So I to E. Okay, so from FEG is the I internal, and the external is the highs and lows. So we took our trades today. If you still didn't understand, you can check again the chat. It's very explained. It's very nicely explained. It's very, very powerful stuff, guys. Because I'm just sick of just finding the perfect short and only to get pumped into like this. So I'm trying to find what is it referring to, and I think this order flow is incredibly important. But whenever we try to go check the order flow on the high time frames, you start to see disrupt liquidity. You'll see monthly being bullish, but the weekly is bearish, but the daily is neutral, but the hourly is bullish, but the 4 hour is extremely bearish, and it confuses you, right? But now you can easily know where to enter, what to target, when to enter, what will get us to that exit, to our target. And all these are narratives. So these FEGs are FEGs which will most likely take us to where we want. If you have 10 FEGs, these are the ones that are likely to take us where we want to go, right? So hope that was useful. I did record, but if you guys want if you have questions, please write in the chat. And Charlie just sent me something, so let me go. Whoa, Charlie. You want to share your screen, Charlie? So you can explain it better?
It's all good, man. I was just giving that to you. It should have midlines on it, so I've got to fix that part. And then right now it's not auto calculating the visible distance on the screen, so you have to manually do your stuff.
Well, then maybe it's the
And the third thing is the start time, end time is not functional. It overwrites the other things, so I'm working on that. But in the meantime, you know, if you're questioning the short-term direction and you see some type of reaction that lines up with your overall bias, these boxes are fucking amazing.
They are.
Dude, it's like 31.25 ranges arranged offset over big figures and mid figures and quarter figures and eighth figures. So these are 16th boxes of price range. And I mean, look at that. Look at that shit over there that where we opened this top spike. So clearly right now in this environment, NQ is moving in 60 to 120 point ranges, and these little boxes will help you step basis your way there.
Yeah.
Yeah.
It's awesome, bro. So how do we exactly use it? Do we wait for a level top it and we short?
You just I made it for very low time frames and short time frames. When you're like, I kind of know where it wants to go for the day, but why is it doing that retracement? Why is it going so far? Where is it right now? Where could it go in the next 5 minutes? That type of thing. So it's sort of just like a leading indicator that tells you, hey, we're likely to go for this.
Yeah, I see what you mean. Oh, let me close. Let me see if we can put this into use. So if we drop into the 3 minute and we put this on here, turn this off. So we got this Fig Newton box right here, and what else do we have? We got the high of this NWOG. So, and we got NDOG and another one here. So maybe we can tap this and drop, or it will be much better if we find where these two interact and maybe tap this all down, or we can also use it as that we have NDOG but we also have this green box above us, so that can also like push it like as a magnet, pull it towards that NDOG, because we also got another confluence like of that Fig Newtons, right? Right, Chadley?
Basically, and so if it comes down into the green box that it's hovering over the top of right now, if it comes down to the middle point or the low point, you long from those points. And if you were bearish on the day and it comes up to a top or a middle of a different box, then you would short from those points.
Yeah.
And it's basically that simple. And it just basically tells you, hey man, if we're going to do a last push and we're kind of like in this crouching pattern of, we're going straight sideways. Basically what you see here, like, is it going to keep going up?
Yeah.
Yeah, it's got to go tap the bottom of that box. Yeah, it also has to go to the 680s, and it's probably going to go hunt the 700 round big figure.
Yeah. The
Yeah.
Newton level.
So it just gives you an idea of like, am I too late or can I still get in type thing?
Yeah.
Or what have you.
And also, I think the best way to use this chart is like, let's say you're long here, and then you start seeing it like drop down, like you say you want to target this, but you see it start going down, then you'll be like, okay, it's just gonna come back into this box maybe, because this is I see these boxes as like retracement boxes, where it will retrace healthy retracement into them to go back up. For example, it pumped, it retraced back into them, it pumped, came back into them, and now it's pushing back up. Now we'll probably do the same thing here again. For example, here.
If you,
yeah, go ahead.
yeah, I was going to say, do you see that big wick in the box you were just in?
Yeah.
That one, yeah. And then look at that small gap to the left of it, that BPR. All right. So you can use it for invalidations and reversals. If we close or rapidly come to the middle point of this box and go below the halfway point of that big wick, which is yeah, exactly that thing. So all those things would indicate to you, oh man, I'm wrong. Let me go ahead and fix this problem. I just lost $300 trying to long this.
Yeah.
Well, let's say you try to long from top of the box.
Oh, let's try to long here. You see a closure below it, and yeah, determine.
And you get stopped out. So then it shows you, hey man, you've got 42 points of range to the downside to get to the next box and maybe go for that liquidity sell side that's below the BPR. Because remember, when BPRs fail, what are they doing? They're going to propel like a fucking rocket ship.
Yeah.
They're going to send the price really quickly, really fast to liquidity beyond the BPR. So that's that swing. Yeah, but here's the thing. The swing is part of the BPR. So the BPR is failing, so I can't use that swing as liquidity target. So you use the volume imbalance below it, which is overlapping the top of that bottom green box.
Yeah.
In the green candles.
This one.
930-ish.
Oh, this one here?
Down, that one, that guy right there. Yeah. So it overlaps with the top of the box below the BPR. So that would be the liquidity target. And if we're to fail the midpoint of this upper box, then that gives you an early warning. Hey, maybe I should look for a short now. And it gives you the confidence to size up a little bit and say, you know what, fuck it, let me put some size on here. And then you would monitor the black area, the halfway point of the black area. You'd monitor that for failure, for continuation, so that you would go to break even and hold your runners.
Yeah.
Shit like that.
Yeah. Also, it will tell you that, okay, here we're dumping, maybe not even take trades inside these black boxes, or like vice versa.
I mean, you'd be surprised if it's really moving and you think you're late to the party and you need to get into a continuation entry. Like, for example, here's a perfect one. To the left at 931, 933, I suppose. Yeah. You could long the halfway point of the wick that's to the left of that. So as we are first testing to the left of it. So as we're first coming up through that green box says, well, shit, if we're going to come out of this green box, is it likely to at least touch the halfway point of that black area? Yeah. And that's like 15 points right there, bro.
Yeah.
What is that?
That's a lot of money, bro.
A little bit more than that. So it gives you the range to work with to make your ideas and your decisions on a short-term basis on real-time price action. And it kind of removes the blur a little bit of, man, I'm just getting fucking, washing machined on the 1 minute chart type thing.
Yes, it's amazing. It reminds me of my white lines.
Yeah.
Yeah, it's awesome, bro. And whenever we like in between, it just consolidates. Look, it consolidates in between and then it runs. You It's fantastic. Are you going to automate this, Chadley?
I'm wondering, um, it would be a little complicated to automate it. I'm wondering which entry strategy would work best with it.
Yeah, that's what I'm wondering. Like, what would you be automating exactly? Like an entry style, what would you put more emphasis on?
It would probably, I mean, the simplest form would be like a breakout thing. It would basically be confirmed breakouts.
Yeah, like here. But then with you,
So, for example,
Yeah.
you would say, I'm willing to take a long in the upper 60% of these boxes, and I'm willing to take a short in the lower 40%, and there's a no-go zone, the 10% in the middle, right? I'll never take a long or a short from the middle. And by doing that, you could have a rule that says, all right, so we're in this, what is that? The middle of this lower box is 25,560-ish. Yeah. So we're coming up out of this, and the minute that it starts to break out, you could just say, all right, I'm taking a trade. And then the second that it gets to the halfway point of the black area, you say, all right, I'm going break even. And then, when it gets to the lower portion, or when it taps maybe 2 ticks away from the lower part of that upper box, you could take your first partial and then close out at the middle of the top, right?
beautiful. But Chadley, one
And doing
question.
doing something like that with a directional bias filter on. So I'm only bullish for the week or
I'm also
whatever.
bullish for the week. Yeah,
Yeah,
for the whole week. Yeah, one question, brother. So, when you said like the bottom 40 or the up 60%, like, do you mean after, like right now, right now it's in the bottom quarter, would you be shorting as it's going down or as it's approaching
Yeah.
a level? For example, it's approaching this level here, and the bottom 40%, would you be looking for shorts here, or would you wait for it to go up, then come back to this bottom 40% to short?
No, you would. So that's the thing. You would have to have some sort of directional filter,
bias,
some
right?
sort of bias still. So the narrative for you is like, okay, well, what I explained earlier was the BPR shit. So what I'm saying is like, as it comes down through and as soon as it gets to the 40%, we would have some entry trigger. I mean, maybe like a JB block combined.
Yeah.
So if a JB block forms in the area I want it to, we take a trade. And then that would solve your direction, right? That literally would be like, I don't need to fucking have a directional filter, because if a JB block is forming in this area of this box, well, it's either going to fail if we're shorting, or it's going to support if we're longing, because that thing's got somewhere to be. It's fucking zooting.
Like this
Yeah,
one
so
here,
let's talk about JB right there. You see it? The next one. That one. Nope. The doji. That guy right there. If you stretch your chart up, I'm almost positive it closed above that high on the left.
You did.
Yeah. See, just barely by a tick. No, the left one. That one. Look at that close.
Yeah.
Yeah. Okay. There's your balance or your J block. So if you mark that out.
Damn.
So then, yeah, we could do something like you were saying, like if it's in the discount zone and a J block forms, we instantly buy it and set the stop loss, a couple ticks below or whatever.
Yeah.
Let's call it the halfway point for the take profit.
What's around here?
The black halfway point. Yeah. Yep. Hey, it's 2-1, man. That'll work.
Of course, I mean, I just chose a random stop loss, but this would be
Well, that down close candle there is a order block. So as long as you're below, if you want to be safe and you're a pussy, you go below the 3/4 line. If you want to ride the lightning, then you keep it right just below the EQ, that order block.
Yeah. Sorry guys, I have to go, but yeah, Chadley, this is insane. I'm gonna play with it today.
Right, cool. And then when I get it fixed, I'll send you the updated
Yeah,
version.
yeah, that'll be
Yes.
fine because I can already imagine like 20 different things I can do with this right now. That's why I'm asking all these questions because
Yeah, I mean, you could basically plug any entry system into that as long as the narrative fits with the behavior on the
Yeah.
boxes. That makes sense.
yeah, we got the directional bias from our order flow, and then these would help us with more mature entries and more mature why am I saying mature? More precise entries and more precise exits. For example, the order flow is bullish today, so I would not expect us to be retracing inside these FEGs. I would expect them to hold through them. But I will be taking partials here. But I'm not going to be closing my position. I'll take partials and I'll keep holding. I'll take partials even if I'm getting displacement down. All these red candles, I don't care. We'll probably sweep this low. We'll probably push back up, take out these relative equal highs, and eventually that high again. But I would not be aiming to close my position like I normally do. I'll be like, okay, we're still bullish. We still have, let's say, a high time frame target, and these levels will give us more like a speed bumps, right? So it's gonna like stop us on the way up. It's gonna give a hit, retrace, hit and retrace. But those are gonna be healthy retracement. It's not gonna be reversals. Like, oh, you're long, and then suddenly it's all red candles. Oh, shall I close? Shall I invest my position? Then you end up investing, and it goes against you again. So
Can you paper short this right here?
I gotta go, Chadley, but I'll try.
I know. Just before you go, paper trade. Make sure it's paper. Okay. Yep. And then stop loss at 662.
660.
Yep. Perfect. Okay. And then you're going to be let's scroll down a little bit or squinch it down. Can you squinch the vertical? Slide it all the way down to that lower discount busy, please. Let's call it that pink line.
Which pink line?
Down there at the bottom.
This one?
930 open or whatever. Yeah, yeah. A little bit lower than that. That's what she said. What is that, 57? You go 53s with it and be safe.
53?
Yeah, that's perfect. Beautiful. Okay, all right, because look, that's the discount block. It's a first presentation. The opening range gap needs to be filled. It's quite large. That's the discount. That's a Model 12 Civi down there. The BPR thing that we talked about is playing out. So this is our extended targets. And you are, if you're going to touch that first presentation, it's got an order block resting inside of it, which is what we're right on top of. So if it's going to go into the gap, it'll dick around a little bit, make you think it's going to go up again, and then it'll go tag that order block, and then we'll know what happens with the first presentation. But more often than not, you want to see them inverted.
Yeah.
Right? That's the strongest way to use first presentation is to wait for inversion of it and trade opposite direction of the gap.
Yeah. Beautiful. And when would you go stop loss to break even, or when would you drag it? Like, what would be your trigger lines?
You mean manually or automatic? If this was,
like, let's say we're in profit right now. Do we just keep stop loss at 62s?
well, you'd want to see these gaps that are forming down here hold and be respected, or just a straight rush, like a bum rush for these lows down here.
Yeah.
And you maybe permit or suffer a retracement up to that last order block, that green candle that's formed around your entry, before you do anything with your stop loss. You want to see, does it go a little bit further, or does it come make an entry off that block or fail it? If it starts failing it, just bail on the trade.
Yeah. Maybe even put a stop loss down when it touches that green box of yours.
Yeah.
Yeah, that's.
I was going to say, when it gets to the halfway point,
yeah,
then go to break even, because if you're wrong on the trade and it's going to respect that rejection block down there that we're looking at as a target, then that's where you know you're going to be wrong. It will start going against you from there. Yeah, there you go. Okay, so break even.
Yeah, the midpoint between the boxes is so important, Chad. I don't know why, but it is. Even on my white line.
Okay, break even. A little bit better then.
Beautiful. Beautiful, Charlie. Let's go.
All right, there you go. Yeah, so there's now the bodies are too smooth down there, so I expect some type of reaction. I prefer to just completely shit the bed and take back all this movement. So this is one of those cases where I think it's just going to dump through. Do you see that red and green smooth bodies that we're trying to get to right now?
Yeah.
Right above the fair value gap, right? No, right there. Yeah, the candle, the smooth bodies down there at the bottom.
Yeah.
That is like target numero uno.
Yeah. Numero uno. هتنقلين بدكس. شو كذا دلنا. There we go. We hit him.
Great. Okay. All right. So then, oh, you've only got one.
Yeah.
I was gonna say take partials.
Yeah. When I clicked short, it was just 1 micro. I thought it was like 5 or something.
Okay. So then target will get hit relatively shortly. If
that
it's
was a
gonna be
nice
aggressive,
trade.
it should go for that area down there.
Literally 0 drawdown, guys. 0 drawdown.
Yeah. All right. So technically, you got filled in. Yeah. All right. Boom.
Chad, you're a fucking beast, man.
Golf clap. Golf clap. Thanks, man. Appreciate it.
Beautiful, beautiful, beautiful. Oh my god.
Look, it's behaving now, so I don't know if they're going to let it be okay until February of next year, and we'll have another good January, maybe good December. It seems like there's enough catalyst for us to have a great end of year and not be just like what we were doing in the middle of the year. That shit was fucking excruciating. Like, I questioned every single thing about my career, everything I've ever learned, all the stuff I've ever done. I was like, dude, can you even fucking trade, bro? Like, what?
Yeah.
You keep blowing these fucking things out, and all it took was for me to abandon NQ in its worst time and go to gold, and I got back on the horse.
Yeah.
So just know, I say this all the time, there's no way for you guys to really know what they took from you unless you've been trading for about 5 or 6 years.
Yeah. It was a completely different world, bro.
But back in the day, holy shit, like it was literally almost every fair value gap was respected, but not only that, it would just touch it once and then it was out of there. Like if you missed it, good luck, dude. It's like 40 points in the next minute candle.
Yeah.
And it was wild and crazy and fun, and I miss it a lot. So maybe we'll get that type of sustained clean volatility back again. If we can see more than one of what we had last week. You know how it would just go from the open last week? It was just gone.
Yeah.
Those are amazing. And what was even crazier is like 9:15, 9:20-ish, 9:23. It was just launching, just, oh, you know what I mean? Like, and it was disguised too, because you'd say, all right, well, he talks about the 8:30 macro, right? Oh, 8:30 expansion macro. You're like, okay, well, why didn't it go? Well, they're like setting everything up early. They pause, they hold it through the macro, and then right about I don't know, 8:36, 8:37, or maybe 8:34, that window right there, that's when it starts going, and you can trust it and just hop in with size. And get out if you're wrong early. Maybe you've misjudged the timing.
Yeah.
But it will start moving in one direction at that point.
Yeah.
If they keep holding that template, for example, if you look here.
Yeah, I mean, Charlie, this trade itself was 80 points. If you just realized, it took like 1 minute.
Yeah. I was gonna say today is not a good example actually, but if you look at all